Alright, welcome to these videos about breaker blocks. We're going over what a bearish breaker block is, what a bullish breaker block is, and how you can use them to frame high probability setups around it. So without further ado, let's dive in. First, we're going to discuss a bearish breaker block. A bearish breaker block is a bearish candle, and you can identify it. Well, you look at a high, then a low, then a higher high, then a lower low, and the bearish candle from the high to the low. This is your breaker block. And why this is called a breaker block? Usually when you have a high, a low, a higher high, people will see this as a bullish order block to trade higher from, but it breaks down, and now this failed order block becomes a bearish breaker. So smart money, when price comes back here, can release their long orders before price going down again. Vice versa for a bullish breaker block. A bullish breaker block is a bullish candle, and you can identify it with a low, a high, a lower low, then a higher high, and the bullish candle from the low to the high is your bullish breaker block. And why is this? Usually when you have a low, a high, a lower low, you can identify it as a bearish order block, but it doesn't, it breaks up, and this failed bearish order block becomes a bullish breaker block. So if smart money trades the bearish order block, it will enter right here, but it doesn't, it breaks down, and while price comes back here to the bullish breaker block, they can release their orders before price can move up again. To frame a high probability setup around your breaker block, it's best that there is displacement paired with it, and you can identify that while you are spotting for value gaps. For example, in this example, if there was a displacement upwards breaking market structure leading to value gap inside the breaker block, for value gap plus breaker block is a very high probable setup for long. Vice versa, if you have your bearish breaker block, PCA, for value gap to the downside, you should anticipate it to be a high probability setup as well. Let's take a look at an example of a bearish breaker block. Bearish breaker block is a high, a low, a higher high, a lower low, and then back to the bearish breaker block to trade down. So let's see what we got here. Got a high right here. It's a low right there, high, low. You're creating a higher high. This is your higher high. Now let's look if we can find a lower low. And we do right here. High, low, higher high, lower low. And now our bearish candle is our breaker block right here. And for a high probability setup, we want to pair this with a fair value gap. And also, you see here is a fair value gap. This is a high probability setup. Let's see what price does here. Comes back to the breaker, and it trades down. And you see how beautiful price comes back here. 1, 2, 3, 4, 5, 6 times. So you add some time to get it, and this is a clear draw on liquidity, these lows. So if you would frame a setup around this, you just wait for the market structure shift. If you look to the left, if you remember the A plus setup, we took liquidity out here. Then we have a market structure shift downwards, leaving a fair value gap paired with a breaker. And this is a very high probability setup with clear draws on liquidity. We have all these lows here, and this happens every single day. Now let's take a look at a bullish breaker block. And a bullish breaker block was a low, a high, a lower low, a higher high, and I come back to the bullish breaker block for trading higher. You have to take a look at this example. We have here a low, a high, a lower low, a higher high, and then your bullish candle right here is your breaker block. And I want to show you this example because it's not always that clean, but I want to show you like price always comes back to a breaker block before moving away. So right here, let's play this out. See, it touches, still not moving away very aggressively. If it comes back, we are in the Friday close right here. So we're going to the new week. And you see price comes back and moves upwards. So you see how many times price comes back to the breaker block before moving away. It's a really nice confidence to have. With our current understanding about breaker blocks, let's go do a top-down analysis. So currently on the 18th of March, we trade into a 4-hour fair value gap, and we expect a bearish reaction from it to the downside. So 4 hour is a trade I took myself. go to the 1 minute. And with the knowledge we have right now, let's see if we can use that. Please pause your chart and see if you can find something. You can see a few breaker patterns right here. For example, we have a high, a low, a high, and a lower low. If we mark out our bearish breaker block. And also, we also see right here is a fair value gap. And here's our high probability setup. You can take all day. So this one is a very nice high probability entry. We have another small breaker. Take a close look. Here for a high, a low, for a higher high, a lower high. So these down close candles right here are your breaker block, and also high probability because we have a fair value gap. So here you got two potential entries on the 1 minute, supported by a higher time frame per the array. To give you another example of a bearish breaker, going to do it again. We have a high, then we have a low, then we have the higher high, then we have a lower low, and then the down close candle is our breaker. This is our breaker. So let's see what price does when it comes back to the breaker. It should support the breaker. And you see the bodies respecting. See how beautiful price comes back one more time. And then moves down. If we go to the lower time frames, we are inside this 15-minute breaker. And if you look at how the structure support right here, with inside the 15-minute breaker, we have a fair value gap. And we see price support that and breaking down even more, leaving another fair value gap. And price comes back here and moves away. So even if you don't want to go to the 5 minute, to the 1 minute, just stay on the 15 minute and use the breaker to see how price reacts from it. And you know, price can always back to the breaker before moving more to the downside. Thank you for watching this video. If you like this kind of videos, please like and subscribe, and I'll see you in the next one.